us. And it's going to get to the point where when the BRIC nations really take hold, and I don't think it's more than 5 years, I think it could be as early as 3, and we're really outside looking in as a country, then I think wholesale amounts of funds will be leaving this country, and then it'll be really trouble. That's why I tell everybody it's not tomorrow that you need to have the ark built, but you should build it now, because within 2 to 3 or 4 years, it's the only thing that's going to keep you afloat. Because if you're still heavily indebted, you didn't live a less is more lifestyle. I'm a big believer in reducing or not having debt. You're going to have a lot of major problems.
In today's new recap, India's gold and silver import surge from UAE sparks economic concerns. India's gold and silver imports from the UAE have risen by 210% to $10.7 billion, largely due to concessional customs duties under the India-UAE Comprehensive Economic Partnership Agreement. The surge has raised concerns about tariff arbitrage and potential revenue losses, urging calls for policy revision. India's gold and silver imports from the UAE have skyrocketed by 210%, reaching USD 10.7 billion in the fiscal year. The surge is attributed to the concessional customs duties granted under the India-UAE Comprehensive Economic Partnership Agreement, signed in February 2022 and implemented in May 2022. The Global Trade Research Initiative highlighted that the import of these precious metals is driven by significant tariff concessions, allowing unlimited quantities of silver with a 7% tariff and 160 metric tons of gold with a 1% concession. The rise in imports has led to calls for revising these tariff concessions to manage the arbitrage. The Global Trade Research Initiative highlighted that the import of these precious metals is driven by significant tariff concessions, allowing unlimited quantities of silver with a 7% tariff and 160 metric tons of gold with a 1% concession. The rise in imports has led to calls for revising these tariff concessions to manage the arbitrage. In addition, India's facilitation of private firms to import through the India International Bullion Exchange in Gift City has contributed to the increase. Now we'll show you the best clips of the latest interview, but first smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Itself that used to be involved in building positions has dissipated. For starters, 10 or 20 years ago, when financial advisors, we were called brokers before that, we built part of all our book around businesses of buying and selling junior resource stocks. That's a dinosaur. There may be a handful of people left, but no one really does that for commission. And so that entree for a junior resource company in particular to the end user, the retail buyer, has dramatically changed. It's much tougher now. Even if all those end users still exist, which I don't believe they do, and I'll tell you why in a moment, you still have to reach them in a much more one-on-one basis, or an alternative, which I haven't seen replica yet what financial advisors used to bring. The other thing is the competition. And I've been quoted as saying, even though I don't like it at all as an investment, cryptos, it's been eating the junior resource market's lunch. It's taken away the people that might have otherwise in the past found themselves in the junior resource market for speculation. And instead they bought into one of the greatest stories that even the tulips are jealous of, that they've created this phenomena of better than the wheel and fire being created altogether. It's very hard, even if a financial advisor wants to, or even an individual through a discount broker, to buy stocks that trade up in Canada, even if they have an OTC symbol. Many of the firms here prevent it or make it that the stock has to be at least $5, which basically eliminates a lot of the juniors. So it's much more challenging. And we didn't even talk about the social, political, and economic issues that are going around the world, where you and I could have been at a conference 20 or 30 years ago, spin a globe, land anywhere and say, yeah, we can go there. Not anymore. The world has shrunk. For me, it's shrunk to be looking in North America in the twilight of my career, but I certainly believe it's far more difficult now to be a miner than any other time in the 40 years that I've been in and around this industry. there would literally be dozens, if not hundreds, of financial advisors who part or all of their business was looking for the next mining stocks to buy. And when they did, dozens, or if not hundreds, of their clients, depending how big a business they had, were told to buy the stock. And that just doesn't happen anymore because commission driven brokerage business is down 95%. Everything is an asset gathering, a fee based kind of situation. So even if all those end users that used to buy those things through brokers, even if they were still in the market, the mining company has a much more challenging time to reach them now because they used to have to go to one person to get to 300. And that is, I think, one of the key reasons why, despite much higher metal prices, we've not seen a correspondence in the actual share price.
In today's news recap, silver price slumps amid hawkish Fed comments, high U.S. yields. Silver's price edged lower and posted minimal losses of 0.38%. Elevated U.S. Treasury bond yields amid Fed hawkish commentary undermined the gray metal. The gray metal is neutral to downward biased after hitting an 11-year high of 32.51. Since then, the pair retreated towards an area near the 50-day moving average at around $29, which is the first support level. Momentum turned bearish, with the relative strength index standing below the 50 midline. Therefore, the first support level for silver would be the 50 DMA. If the silver price dives below that level, the next support level will be the 100 DMA at $26.40, ahead of the May 2 low of $26. On the other hand, if silver buyers conquer $29, they must clear the $30 handle if they want to retest the year-to-date high of 32.51s. Now, we'll show you the best clips of the latest interview, but first smash the subscribe button, check our links in the description, and hit the like button if you find our recaps valuable. Enjoy the episode.
Biggest is no advertising dollars there. They make an awful lot of money from the financial service firms that are pushing all the crypto types of currencies. And therefore, that's what they build around. The second is there's always been a Rodney Dangerfield, who was an old comedian that used to say he never got any respect. And gold has never gotten the respect. In fact, it's been treated like kryptonite by the general financial community, at least in the US, for as long as I've been in it. It's an amazing phenomenon when you talk, especially to young financial advisors. I just gave a talk to a few couple weeks ago, and I say, can you name the three tier one investments in the world that are recognized as, the single best? And of course, they say stocks and bonds, but they never can guess the third one. And I tell them it's gold. And yet, none of you, and none of them did, have any exposure or your clients to it. Why is that? And why has something for a couple thousand years where certain currencies and paper monies have come and gone, and this thing can still buy what it used to buy 100 years ago, 500 years ago, and you don't have any? And the last thing I'll just say, Patrick, when I sit in our planning business with our clients, prospective clients, when I tell them, listen, I want you to buy some gold and hope it doesn't go up, they all look a little strange, Patrick, and they all say almost the exact same words. Mr. Grandich, why do you want me to buy something that you don't think is going to go up? Well, I tell them, because if it does, what you own a lot of is likely going the other way. And that's the big missing ingredient, I think, to gold. And what I think has happened to it is that people who have seen that value, particularly out of Asia and your area of the world, and because of what's happening with the BRICS. I'm a big believer, Patrick. I don't want to jump all over, but I'm probably one of the biggest voices that are positive in what would be called Main Street, Wall Street still at these days, on the belief of where BRICS are going and how negatively impacted countries like the United States are going to be. And I think part of that is because they recognize gold, and gold will be some part of their, whatever it is, alternative currency, some type of tradeway, digital support to gold. But that, I believe, they are going to be a big believer in. And let me just say this: I believe the BRICS will be to world trade in the next 3 to 5 years the impact the same as the Industrial Revolution had on world trade.
Right. I remember you mentioned the BRICS.
I think they already are, and I think when you see that, uh, I think there was too built of a high expectation for last year's results when there were just a handful, but now it looks as many as 40 countries are ready to sign and become a part of it. And my understanding, there's as many of those that are now going through the process of what it would be like and all. And I think a key thing happened a couple of weeks ago, Pat, that really got no coverage in the US, but I think it's key to this belief. France and the United States are supposed to be very close to concluding an agreement of taking the interest on the money that they have frozen from Russia's assets and giving it to the Ukrainians. And if you want to see more countries want to run away from the United States, because they have to ask themselves, well, listen, if they did that to them, what's to say they can never do that to us? And I think that would be the straw that breaks the camel back, and it'd probably be the single biggest advertisement for the BRICS to interest other countries.
What do you think of Peter's take? Do you think within 5 years, gold and silver will be the only money available in the United States? Are you accumulating more precious metals, or are you paper handing and panic selling at these prices? Post in the comments section how you're managing this markets. Thanks for watching till the end. And now check this video right here because it's a perfect fit for you. I see you on the other side.